Let's go local, and we're talking, of course, about Woolies, which is clothing and food, of course, but more clothing now because of the Australian footprint. Market capitalization 70.64 billion rand. Price earnings ratio 12.46. That's way lower. Dividend yield 4.64. Let's go straight to the share chart, which will reveal that it's trading below 70 rand a share, which is a bit disappointing. All-time high was 105 at the end of 2015. It's been heavy and rough sledding since then. Tough for those holders.
And probably going to remain that way for a little while longer, unfortunately. But, you know, if you are someone that buys into the Woolworths story and the quality of the company, never mind the, you know, the garments they produce, I think it's worth looking at.
Well, let's talk about that. So they go into Australia, cost them a lot of money to buy David Jones. That added to their existing country road business there. Australia, though, looks like it's doing fine. It's benefited from improved commodity prices. That's not bad. It contributes hard currency earnings because the Aussie dollar has been strong. But it's kind of gone a little sideways. The local business is battling a little bit, especially the clothing part. Food still seems very good. Ian Moyer is spending most of his time in Australia, which is okay because they, I think, have 55 or something % of their revenue from there, and that's where the real challenge is, to get the costs in the David Jones business down. But if you look at the most recent earnings, I like the underlying trends. I know people would have preferred stronger numbers, but, you know, it takes a while.
So I mean, I think they're really just adjusting to that big acquisition that they bit off there, which was David Jones. The Australian economy going to grow 2.5% this year, mid-3s next year.
Not bad.
That's good with a middle class that's sizable and is going to be buying these.
Although
clothes.
their retail sales year-on-year sort of numbers also looking a bit spongy.
Little bit low, fair enough. But I think the underlying strength of that economy is there, whereas maybe not the same.
Property prices are still high.
Yes.
Speaking of property, one of the things that drove Woolworths' earnings higher, not their headline earnings, but their earnings, was the disposition sale of some flagship type properties in central Sydney. So they've moved their head office out of like a downtown department store kind of context into some warehouse in Melbourne, and they're going to redevelop and offset some of the costs of their high. So that's one of the key things they can do in David Jones, is to dispose of or rework the property portfolio a little bit. But that's a sign of management discipline and the right kind of approach you'd like to see.
I like that. So whether it's their merchandising technology or their supply chain management or the property portfolio, I think they're really learning to sweat the assets very well. The David Jones was not a gamble, but it was a big play for them. We're seeing it being adopted well here as well.
Because let's just be perfectly clear, David Jones was like a Stutterfords in Australia. It was a kind of old flagship downtown sort of place you'd go with your gran to have tea, and maybe if you got lucky to buy yourself a t-shirt. That has been replaced by a more aggressively managed team that's trying to do more in-house brands, because again, the Stutterfords type model is where you have little stores within stores of external brands, but that the margins aren't as good, and so you need to revolutionize, shorten the production runs, do the sourcing. But the Woolworths team is full of talented individuals who can bring this new way of thinking to bear, is my view.
I think so. You know, there's a few lagging parts in it. Country Road, although that's starting to look like it's improving. David Jones was an international brand that came here that we like as South Africans. You know, we perceive imported brands to be of quality. So yeah, I mean, I think there's a lot of good things here. And you know, if you look at what the company's been doing at the moment, it's still stuck to its knitting. It hasn't panicked. It's maintained the dividend to shareholders, and on probably the best valuation we've seen in a very long time.
Exactly, very cheap. So you inclined to go hot on it, notwithstanding the current circumstances? Thanks to the international exposure?
I really like it. I mean, I think you're buying quality at the right price here. I'm hot.
Okay, good. Right, now let's go to the more locally oriented. Yes, hot on that one.